Hello everyone, and in this video we're going to be covering resting liquidity, in particular buy stops, sell stops, internal, external, marking liquidity, session liquidity, all that type of stuff. So yeah, let's get into it. And just before we get into it, I want to mention, if you want an ExoCharts course completely free, this template down below will show you how to get it, and it's again just through signing up through one of our links. Okay, there's tons of different exchanges supported, so go and do that. It comes with tons of extra perks as well, including 1 month of free ExoCharts as well, which is usually $50. Lifetime CoinMarketMan, Notion templates, and exclusive Exo templates as well coming soon. So yeah, getting into it, really, I want to talk about liquidity. There'll be timestamps below for anyone that wants to get into it there as well. So yeah, basically when price reaches any sort of high or low, okay, you're going to get three things occur: positions exiting, breakout traders, and liquidation runs. Now, the way you can identify between them is really only through open interest and an understanding in that sense. So what I mean by that is, if price approaches this level up here, for example, this, I've highlighted this, that's why I decided to do the video, you'll get a lot of people saying that there is a ton of market buying happening up here. Yeah, now there always will be, but it's your job as as an analyst almost, through open interest to decipher, is that new positions, or is that positions getting stopped? Because let's say, for example, I'm trying to, how am I going to do this? Let's say, for example, you're in a short trade, okay? You're in a short trade here, and you get stopped out of your trade when price hits this high, okay? Let's say actually you're in a short trade the whole weekend, and then when price spikes this high, you get stopped out of your short trade, okay? Well, you're going to be market buying still. That still classifies a market buy. The same way as if someone who actually market buys a fresh new position up here is also going to be market buy. The only difference in that case is understanding that when someone newly market buys, you're going to get an increase in open interest, and when someone's getting stopped out of their position, their already existing position, it's going to be a decrease in open interest because money is exiting the market instead of entering the market. Okay, so why is that important? Okay, because I tend to find that these stops, and we're going to talk about tons of different nuances in a minute, but what I tend to find is that breakout traders, let's say this high here, okay, was consistent of new longs, meaning open interest increasing was positive delta, okay, this high here was consistent of that, and you then started to come back below the level. I'm much more of a trader, or of the perspective that when you see that type of price action where traders are trapped, that the move is likely to be much more aggressive as such. Instead of just positions getting stopped and then rallying back down, that's not as aggressive. Now, what you can be doing is, if we're looking at ExoCharts, just quickly here, is how do you know, open interest is a bit of a complex thing, because we'll do this, we'll open this up, okay? The only thing you can do with open interest, okay, is most people just look at it as like a net value here, which is, in simple terms, definitely enough to do that, okay? You can definitely look at this and go, open interest is increasing, cool, within this entire candle. But it's also important to understand where that open interest is increasing. Again, you can look at this through open interest removed versus created in Exo, so you can see where open interest is increasing, and then you can also have here, I know I might be moving a bit quickly here, but this will give you a true recognition as to where the open interest is coming in, alongside where the positive or negative delta is coming in as well. So you can see, for example, up here, positive delta and open interest is increasing, okay? So that's new longs up there, and you can go through and you can see really where those positions are coming in from. And I would say that in the majority of this candle actually is open interest increasing, okay? A lot of it is open interest increasing with new longs, at least at the highs, and it's going through and dissecting that type of data, and you can do that through Exo. So yeah, like I said, just going back to TradingView, identifying, is it stops getting hit, is it new breakout traders entering? I prefer to see the second, and it's going to always be a combination of two. You'll never just get one. It will just be one's more obvious, okay? And I tend to go with this is more obvious when I see breakout traders entering, and then we'll put them offside instantly to then see a complete larger reversal, okay? The second one is internal, external liquidity, okay? So if we just go on like the 4 hour, okay, you're going to get internal and external liquidity, meaning you'll have these major pivots, and then you'll get liquidity internal from them, right? So when price is coming down here, so let's just replay this to here, okay, and we'll just one candle, we'll go back one, okay. when price is even here, right, I'm thinking to myself, this is the pivot, this is your swing low, and you know, as this is creeping up, obviously in hindsight I know this is swing high now, but still I'm waiting for this candle here to form at least 2 below it to then go, okay, this is now the swing high. And then obviously, you know, if it came up again, then it would no longer be the swing high. But now you've got two large, obvious swing points in the market, right? And anything internal to those, so these are your external liquidity, in my opinion. And then going internal to that, right? You then have internal points of liquidity. Okay, these pivots here, for example, 1 and 2, I tend to find them as much more obvious points where people place their stops and be able to look for swing failure patterns, failed auctions, deviations, stuff like that. Okay, I'm not a massive fan of like marking these levels out. I'm much more interested in what's going on internally to that. So here, and here, and what you can be doing, for example, is, so let's just mark these out. Okay, let's do this together. External. We're going to do the same at the top. External. And then we're going to look at internal to that on like the hourly. Okay. And we want to recognize, where would people internally be placing their stops here? You know, so one place could be down here. People could be trailing their stop to like the higher low. Okay. I'll show you what I would recommend as well in a second. Okay, same way I would definitely be down here, and this is what I was going to literally mention towards here, is something like this. I really do like this level. Okay, so down here is a really nice level, because if we just zoom in a bit, right? So you've marked your external points now. Now, if we're looking at the internal, you got 1 point here, 1 point here. So you've got 2 or even 3 with this here, 3 consecutive higher lows. Right, really resting. So if I was just to mark it out like this, right, this is how my brain is seeing this, is that I have almost 3 points, or you know, 3 points in which stops will get hit. You know, down here it's not as, you know, there's nothing as aggressive. Okay, so you know, for example, yes, potentially, but it's not as close together. I'm not a massive fan of this as much. There's still the possibility you see like stops hit there aggressively, but I'm looking for the last level, and then the stops above that are, you know, supplementary to aiding a decent reversal from that lower level in this case. Okay, so now we've got our internal levels, and I have no idea what happens in this case, but you know, let's just fast forward and see what occurs. So obviously prices have bounced from there. It's 2 weeks to hold, continues. I'm not trading in these bounces, but just so you can get an understanding, okay, as to how I'd be marking out these levels is really, really important. Because these internal liquidity levels, at least in my opinion, are extremely, extremely important to seeing like these really decent lower time frame reversals. Okay, so marking them out, and it would even make sense to do it now. Okay, because if we're just looking here, you know, if we're looking right now, you almost have this here. I'd mark, you know, 1, 2, you got a few stops resting still above there for a reversal. But just using the internal, marking your externals and then looking for the internal like resting liquidity series of higher lows or lower highs, okay, that can be really powerful to, you know, looking for the larger reversals. And more importantly is identifying the reaction there. So if we're looking at the for reaction at one of these levels, what I'd want to see is obviously like a spike in relative volume. So if we're just going to pick something apart, let's just look here. What's the date? The 5th of Jan. So let's just go on the 30-minute and go down here. Okay. If we're to mark this low out, for example, what do I want to see down there? I want to see a spike in relative. This is a really good example for this. So pay attention here a lot. Because, right, you might be thinking, you zoom out, and you go, you know, there's nothing really standing out here, whilst we're zoomed out at least, as to what's forming this reversal. You know, what do I look for at this low to be hit? But what I'm seeing is, I'm zooming in. Obviously, I'm doing this on XO. But look at this candle's volume. Whoops, let me move this out of the way. Look at this candle's volume, right? It's all the way up here. Compared to its relative a day even, or like just 20 or 30 candles before it, it's the highest. If we just look here, look at this compared to any of this, this is clearly much higher, and it just so happens it's within this candle here when the low is being taken. Obviously this case is largely stops being hit, but you're getting stops being hit, the low is getting taken, increase in relative volume, and then you're seeing the close above. I don't want to overcomplicate that. That's what I'd really look for. I think to take some of these trades, I'm not just looking at that. I think it becomes down to much more understanding the context of the day. For example, I need to have a target, and this is something I'll cover later, but I need to have like a stats based level to target towards, really. I'm not going to long down here with my first target being like this. It doesn't make sense. I need to, if I'm going to long down here, I have to have a really good reason as to why I think price is going to come up here, okay, to give me any sort of like supplementary good R on that trade. If I'm looking at something like this, even if I got in later, I'm probably going to be targeting towards these highs, but I have to have like a good reason to do that. Like what sessions is put in, etc. Go read some of my posts. I discuss this there. Okay, so that's what reactions you want to be looking for. Spikes in relative volume, liquidations. You can be looking at liquidations also through exo charts. Okay, you can see it down here. Okay, this bottom row, you can see one point, especially at this high, for example, yesterday, 1.5 million before it, 600k at it, and that's also a spike in liquidations, I'll definitely say. But look for that at your level of interest. To supplement that, one thing I'm going a bit all over the place here, but there's definitely something I've mentioned here. I haven't followed this, but if you go to this, I'll post a link to this in the description, but it's an indicator that I got made. It's called pivotal moments. I don't know why it's not working right now. Oh, there it is. But if we look, where's it gone? It will mark out the swing highs and lows on your chart. So it might be a bit faint here, but you can go and configure it all. I got it done. You can go download it. It's completely free. Go and use it, and it will mark out these like lower highs and highs. And why I like doing this is, like, for example, up here you can see there's two consecutive lower highs right close to each other. So I'd mark out the higher one as an internal point of liquidity to be paying attention to for a potential reaction. Okay, so, and you want to gap after it. So for example, like why I like this one so much. It's not fantastic, but why I did like this one down here in the example I was going through with you all was that we obviously had that 1, that 2, that 3 that I was looking for. It doesn't need to be 3 or 2, generally 2 or more is what I'm looking for. But after that, there is no significant swing point really until this low here. So you have this is your last low, then you've got this gap. So if price doesn't do that, it's going to do that. So it makes it really clear where you're wrong on the idea. Okay, so I'm hoping that makes sense in that regard. So use this indicator to identify those like resting stops, etc. is really, really powerful. Okay, go and configure it how you like. Go and do that. The other thing I would say is about in regards to the reactions are fine. I think you understand that. Just be sure you're paying attention to the open interest. Like I said, it's super powerful when just looking at the open interest to identify like these breakout moves and like when to fade them. Okay. Yeah, okay, that makes sense. Now, the last thing I wanted to mention was like session liquidity. Okay, and I also got another setup I want to talk about because it's a bit of a tricky one, and I want to talk about that as well in a minute. But if we just go to sessions, don't need any of these. We'll hide everything else. Okay. Now, this is something. This indicator will just show me the way I've got it set up. It's just going to show me each session, New York, and boxes around them. Really easy to do that, but there's a lot of power in doing this because what I can see is where the stops are going to be in regards to each individual session. Okay, so something like this is powerful. Look at this. London session high, price goes towards the lows, it rallies up, takes that high, and then sees continuation. I'm always interested in session liquidity because people are also placing stops above and below these areas of session-based liquidity. Okay, so this isn't too complex, but it's definitely again something I'm paying attention to all the time. It's a session-based liquidity, and in particular London session revisitation. So I always talk about this with you, but the stats on it just give me every sort of reason to do so. But if London session puts in the daily high or low for the day, like, you're going to see continuation in that direction. So for example, to put it as simple as it was, Asia, London sessions here, London's got the low. No point longing any of this price action here. This is really powerful, although it looks really small. It's like 2 hours worth of price action. There's no point longing here, right? Because I know statistically this low is going to get taken out. Okay, so yeah, stuff like that, powerful. Stops above and below these resting points. So I'd mark something like, you've got a high here, London session, Asia session, close session. I'm interested in this level here because you've got something like this. London session high, Asia session high, and then you can maybe get the reaction there as well. So there's tons of ways to be looking at liquidity. You've got to be looking at it from all different angles. And another one of my setups that I really want to put some attention to and shine some light on it is when price does this. Let's say you've got a level you want to be looking for. It'll swing failure pattern it, okay? And then on this rally, so like, let's say this is a really nice stop, and then on this rally here, what you'll see is tons of new longs entering, so open interest increasing on the little small rally. Price will then dip. So this first move has got stops, so people get stopped out of longs, okay? So longs get stopped, then new longs enter straight away. This is a classic swing failure. New longs enter straight away. Price then dumps further. Price will then dump further, and then it will rally. So what it's doing in this case, and this is something from watching the charts for years, is new longs get stopped. They enter back in. They go, it's a swing failure pattern. I mean, they enter back in really aggressively because this is the low now. They'll then get stopped again, and then they'll definitely puke and be like, there's no swing failure pattern. It's over. And that's when then price, and that's when you get breakout shorts even more confident in like this market's going to be moving down. And that's when you get like a full on reversal to the upside. So the way you get around this is by being, let's just say, a bit more creative with your stop placement. And this is the whole kind of segment around this, is that, liquidity is just an essence of like, where different traders placing their stop losses. How can you benefit of this? How can you kind of work your way around that all through being creative in your stop placement, not having your stop where everyone else's stop is placed, and basically playing off of other people's stops being run and breakout traders entering and stuff like that. So there's tons of things to discuss in that essence. I hope you lot found it somewhat beneficial. Again, I'd want to enter here, so hopefully that makes sense. And I'll catch you all next time. Hopefully, if you have any questions, drop them down below.